Well, hello there everyone, and welcome to this video update on the euro-dollar currency pair. We're not going to waste any time, we're just going to get right into it. So as you can see here, I have labeled a 5-wave advance from the May 13th lows at 103.49 all the way up to the May 30th high of 107.87. And that 5-wave rally can be considered a larger wave A. Now, technically speaking, we can consider that entire move either wave 1 or wave A, depending on how bullish you are on the euro's future prospects. That being said, the reason that I see this as a wave A, or more likely as a wave A, is because I don't think the entire decline in the euro is finished. What I see here, broadly speaking, is 1 wave down, 2 waves up, 3 waves down. We still need a 4th wave, which is what I believe we're tracking right now, followed by a 5th wave lower. So once we've completed 1 more leg lower, that would fulfill, in my view, a much better textbook count for a complete impulsive decline in the euro. That being said, it's always possible that we've already completed that decline. We don't necessarily always get a clean textbook count in the markets. I like to say this all the time. If the markets always gave us a clean textbook example or blueprint to follow, then wave analysis and market analysis in general would be a lot easier and everyone would be able to do it quite successfully. So depending on how bullish you are, you can count this as a completed wave A, the way that I am, or you can count it as a wave 1 and this decline is a wave 2. The reason I don't think it really matters in the short term is because both of those counts, whether you're tracking this 5-wave advance as wave 1 of a larger impulsive cycle, or you're tracking it as simply wave A of a 4th wave zigzag, it's kind of academic, because regardless of which of those counts you adopt, the next logical conclusion will be to track another 5 waves higher. The only question then becomes whether that 5 waves higher is going to be a wave 3 or a wave C. The good news is that as that impulsive advance begins, we can set some parameters that allow us to confirm the presence of 3rd wave price action. This is where I'd recommend checking out my video on channeling. There is a channel that we can draw. I'm just going to assume here for a moment, for the sake of this example, that this corrective decline in the euro has ended on Friday. So we can draw this corrective channel. And if prices break hard out of the corrective channel with a sharp slope and then find support on that channel, then it's likely we're dealing with an impulsive advance. On the other hand, if prices trade with a gradual slope towards the upper boundary of this channel and come into the target range for this 4th wave here, without really being able to successfully break out of it, then the odds increase that we're dealing with a simple ABC zigzag. Now, we always need more price action in order to become more certain about a particular wave count. Now, that's always the balance. You want to be as early as possible in some sense, because that allows you to maximize the potential risk-reward profile on any trading opportunities you might be looking out for. On the other hand, you don't want to be so early that you enter into a position with 0 price action confirmation or information for that matter, because then the probability of your trade working out is not going to be as high. So it's a fine balance, because if you wait for too much information, then the opportunity may have already passed. So we're always trying to balance timeliness and accuracy, both as market analysts and as traders. So anyway, just getting back to the count at hand, the question is, what shape did this decline in the euro take? And by this decline, I mean this 3-wave correction. Well, in my opinion, this looks very much like a flat. And a flat is what we call a 3-3-5 structure, where wave A will unfold in 3 waves, wave B will unfold in 3 waves, and then wave C will unfold in a 5-wave decline, either as a standard impulse or an ending diagonal. So the question for me is, can we count 5 waves down in the euro? And if we get to a lower time frame, that's where, in order to have a bit more clarity into the subwaves of the euro, that's where it starts getting interesting. So we had a pretty sharp drop in a straight line here off the back of Friday's inflationary report. So there are a few ways to count this, but if you want to count that entire decline as wave 1, you may. This could be wave 2, this is wave 3, and this sideways price action could be wave 4, which means we need one more low in order to complete wave 5 of wave C. I think that's a very, very acceptable price count, considering how difficult it is to count this decline as a finished 5-wave sell-off. Now, I do believe that there is a world where you could shoehorn a 5-wave decline here already. 1, 2, 3, 4, and 5. What we want to see to confirm that the decline in the euro is over is ultimately going to be a 5-wave rally off the lows. That's going to be my initial price action confirmation that the decline in the euro is over. And I do think, regardless of whether this next rally that I'm anticipating, whether you think it's going to be a wave 3 or a wave C, I do think that it's worth trading for. So I'm going to be waiting for that 5-wave advance followed by a 3-wave decline. And that's going to be, in my opinion, the best trading opportunity to position yourself for the much larger rally that's yet to come. So the bottom line is that we have to be a little bit patient here with the euro. We need confirmation, evidence, in other words, that the euro is putting in a bottom. Once we have confirmation that the euro has put in a bottom, we need a bit more evidence to now suggest that the euro is ready to rally in an impulsive manner. Once we have that, then, in my opinion, it is wisest to wait for a clear corrective decline or pullback, which will afford you an excellent opportunity to time the market from an entry perspective and also set a high confidence stop loss based on a price level that's going to allow us to maximize the risk reward profile for any potential long positions. If you want to play the short side on the euro, let's say you think my count's completely wrong and you believe that the next big move is to new lows, well, that is always a possibility, and I'm aware of that possibility. I'm not discounting it entirely. So what it would take if you wanted to play the short side here, and I'm just playing devil's advocate for a moment because I don't believe at this time that is the more likely path prices will take, but I'm always open to being wrong. But if you do want to play the short side immediately, you would look for any kind of corrective 3-wave rally in order to sell that for fresh lows. Now, I'm primarily a trend trader, and because I can count 5 waves up, to me, in at least the relatively short to intermediate term, that trend is now pointed to the upside. It would take, if I'm looking at this on a higher time frame level, then it would take another, complete 5-wave market decline followed by a larger degree 3-wave pullback in order for me to get interested on the short side. All right, so I would need to see a lot more before I'm convinced that we can short the euro confidently once again. I think despite Friday's price action, despite Friday's trading, which probably sucked the market into going full boat long the dollar, my view, and typically speaking, Elliott Wave analysis allows us to be a little contrarian here relative to how the rest of the market is positioned. My view is that the better opportunity in the euro is likely to be to the upside. But here's the really cool thing. Utilizing the parallax method of trading, we do not position ourselves in any trade until we have a lot of evidence. Not just on the wave principle, we like to combine other indicators as well, but we're looking for a lot of technical evidence to point us in the direction of that greater trend. So the evidence that I have right now is pretty good. I've got a 5-wave count. I have a 3-wave corrective setback that looks very much like a textbook Elliott Wave corrective pattern known as the flat. So all I'm waiting now is for that initial rally followed by a corrective pullback, and that should afford us with an excellent opportunity to take some risk going long the euro. So I hope this video is helpful. Whether you agree with me or disagree with me, I'd love to hear from you. We're always interested in talking to people that want to engage with the wave principle. It is the foundation for everything that we do here at Parallax. So if you are interested in the wave principle, or you've come across Elliott Wave Theory before and you want to know a little bit more about how it works, please drop us a comment, and we'd love to continue the conversation. So traders, talk soon. See you in the next video.